Let's bring that all together. Wasif Latif joins us. He is the president of equity investments at USAA Investment Management, which manages $45 billion in assets. Wasif, let me, thank you for coming on. Let me ask you, first of all, your take on this Dow 12,000 level. Maybe not significant, really, to the traders, but it does show you that we've come a long way in the past couple years.
Yeah, that's right. And as Zara mentioned, it's a very important psychological threshold for the retail investors who really look at that and say, I need to get back into the market. And so that can continue to push the market a little bit higher from where it is.
Go out to Chicago, bring in Andrew Keene. He's an independent trader at the CBOE. And you know, we're talking a lot about these levels here, Andrew. The S&P 500, Dow 12,000. Is that a big deal to you guys?
Yeah, I mean, the Dow is important for 12,000 for the retail customers. But, you know, I'm looking at 1,300 in the SPX. We're at 1195, 1197. I'm also looking at 1315, 1315. It's the August 2008 highs. I think we're going to continue to grind up there. I think we are overdue for a correction. I think we will get about a 5% pullback. But, you know, I don't want to be the first person to dive in and get short. You know, if I see 2 or 3 straight days when we're going down, I want to get short. But intraday, I try to buy on all the dips.
So you're looking for the momentum to turn over, and you want proof before you get in there and bet on it. Let me ask you about the VIX here at 16, 17, a level that you think is too low.
No, I don't think it's too low. I think if we're going to grind higher, I think the VIX is going to go lower. As evident is today, the VIX is down a point. You know, the market's up a little bit. If we continue to grind higher up to 13, 15, which is another point, you know, the VIX should be lower. It should be 15.5, 15. We're not getting huge movements in the SPX on a daily basis. You know, probably around like 8 to 12 points intraday, which isn't that much. So I think the VIX will come down if we rally. Obviously, it's a little bit higher because people think there could be a correction.
Hey, you know, Wasif, a lot of things play into market sentiment. You know, Adam breaking down, some of the earnings just today. Qualcomm, we're waiting for a few others. I mean, how much do the earnings numbers and releases kind of play into your thinking about the outlook here?
Well, they absolutely matter. Earnings obviously are the ultimate driver of stocks in the long run. So while sentiment plays an important factor in the short run, earnings are the key driver. And the fact that you're getting a really strong earnings season with beats going on for the large part, I think that really speaks to the high margins, the quality of earnings that we're getting from the corporate side. And agree with Andrew, there could be a short-term pullback.
Is it really convincing, Wasif? I mean, you say yourself that it's still a lot of cost cutting. The question is it sustainable? And of course, the majority of companies beat expectations every earnings season.
Well, they have been beating, and you're right about the margins piece, and I did mention that to you earlier. Margins are very, very high, and that's largely been coming from cost cutting. So what we are looking for is top-line growth, but this season is not necessarily the season where market is looking for that top-line growth. If it's coming, that's great, but generally speaking, as long as earnings are beating and margins are sustaining themselves, that's fine. We think that in the next quarter or two, the focus will start to shift towards top-line growth, and what are the companies doing with all that big pile of cash that they have? Are they doing M&A activity? Are they paying back dividends? Are they doing share buybacks? Things of that nature will be the next leg that pushes the market higher post this earnings season.
All right.
Andrew, what about you in terms of earnings? Do you really kind of care? Are you bigger about some of the macro issues? Maybe some of the stuff the Fed did or didn't say today, the jobs report in about a week and a half, those GDP numbers on Friday. What's the most important thing, do you think, in terms of the trade and the outlook here?
Well, you look, and the earnings have been good for the most part. You know, we have oil stocks, you know, hitting 52 weeks high. You know, we have the rail stocks are doing very well. You know, all the industrials are doing well. But, I look at Apple a lot. I look at Google. Apple blew out their number. It trades up to 357 and sells back down to 327. Same thing with Google. It was up $15 and had a $30 reversal. So, you know, they are beating earnings. And, you know, for the most part, you know, stocks are going higher. But we have had some reversals in some key tech stocks. You know, tech's been kind of leading the way with oil and commodity stocks. But it's getting kind of top heavy up here, I think.
Andrew, right now, and Wasif, let me ask you guys, as far as the turnarounds coming, and Andrew, you said you think that we could see a change in momentum. Wasif, do you think that any further climbs higher here are justified? I mean, considering the economic news that we've had, it's been better than expected, but it's not been fantastic. It's not been blowout as, say, Google or Apple earnings.
Well, I agree with Andrew that there could be a short-term pullback in the near term because of the excessive strength that we've seen, and really the market has priced in a lot of these good news coming out of the stock markets and the blowout earnings. But given the flows and the liquidity that the Fed is providing, they just announced today the pedal to the metal approach to liquidity, and that the economy is gradually gaining momentum. Any pullback will probably be seen as a buying opportunity to get back in.
Andrew, you anticipating any kind of pullbacks as of late here?
Yeah, I agree. I mean, pullbacks are going to be buying opportunities. Like I said, I think we feel pretty top heavy. I think we could go up maybe another 20 points to the August 2008 highs of 13.15. If interest rates do go up, with a lot of people think they might by the end of the year, then that's going to pull back for stocks as well.
Okay.
I think we might get a correction.
All right. Good to get some time with you. Andrew, Wasif, thanks, guys. We appreciate you walking through the close. Then